In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which was testing and rejecting this very strong level of previous monthly support here, then it did it again here and here, and a few months ago the market tested its zone and created their last green candle here before breaking the level to the downside and then back above. At this point, this previous support is now again acting as support here, and we can see in fact how the market has already tested its zone and started to reject it to the upside. So from a monthly perspective, we could expect more bullish price action to be created away from this area. Dropping down on the weekly, what do we see? Now, from a weekly perspective, we can see how the market has just started rejecting to the upside this area of previous weekly demand and support, which was created when the market printed this wick here on the weekly, preceding all this rejection to the upside. Again, the market here tested its zone and started rejecting it to the upside, as you would expect in this situation, since this area is previous demand, which is currently still acting as demand. We can also notice how this candle here is a candle with a very long wick and a green body. Usually when you see a candle like this, you would expect the next one to at least try to fill in the wick. Going down the daily, what do we see? Now, from a daily perspective, things get quite interesting. In fact, what we can notice is that exactly from here, this massive rejection to the downside was created, meaning that this area is very strong previous daily resistance that, since the market has now broken it to the upside and is currently retesting it, is acting as support. So we have previous daily resistance turned support here that we could expect the market to potentially reject. So there is the possibility, at least, for a potential rejection away from the zone. So how we could be approaching this potential move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.